Most people don't fail at P2P trading because it doesn't work. They fail because they approach it the wrong way. And if you're watching this video, there's a high chance you've either lost money on P2P already, or you're scared to start because you've heard too many bad stories. Here's the truth most people won't tell you. P2P trading is one of the safest and most beginner-friendly ways to make money in crypto if you do it correctly. But the majority don't. In this video, I'm going to break down exactly why most people fail at P2P trading, the mistakes beginners repeat over and over again, and most importantly, how you can avoid them, even if you're starting with small capital. No hype, no fake screenshots, just real guidance. If you stay till the end, you'll understand why P2P is not gambling and how to treat it like a proper system. Let's start with the biggest mistake. Mistake number 1, people think P2P is fast money. Here's the first reason most people fail at P2P trading. They think it's fast money. They see videos online saying, make $50 in 1 hour, easy daily profit, passive income with P2P, and immediately their expectations are wrong. P2P trading is not a get-rich-quick strategy. It's not day trading. It's not betting on coins going up. P2P is closer to digital arbitrage and cash flow trading. If you come in expecting big profits instantly, no learning curve, no patience, you will either make reckless trades or quit too early. Here's something you need to understand. P2P rewards patience, not speed. The people who last in P2P are not the most aggressive. They're the most disciplined. So how do you avoid this mistake? You fix your mindset. Instead of asking, how fast can I make money? Ask, how can I make consistent, repeatable profits? That shift alone saves most beginners. Mistake number 2, starting with no system. This is where things really go wrong. Most beginners open Binance P2P, scroll through offers, and just guess. They choose random sellers, random prices, random payment methods. No system, no rules. And then when something goes wrong, they say, P2P is risky. But the truth is, random trading is risky, not P2P. Let me be very clear here. If you don't have rules, emotions will trade for you. A simple P2P system includes which coins you trade, which payment methods you use, minimum seller rating, when to buy, when to sell. Most people skip this step because it feels boring. But boring is good. Boring means controlled. Boring means repeatable. If you want to avoid failing, trade only 1 to 2 coins at the beginning. Use 1 to 2 payment methods. Stick to the same filters every time. You don't need complexity. You need consistency. Mistake number 3, ignoring seller and buyer ratings. This mistake alone wipes out so many beginners. People see a slightly cheaper price, and they ignore everything else. Low rating, new account, few completed orders. They ignore it just to save a little money. That's how you get scammed. On P2P platforms, reputation is everything. High-volume traders with thousands of completed orders, 98% to 100% completion rate, didn't get there by scamming people. The cheapest offer is often the most expensive mistake. To avoid this, always check completion rate, always check number of orders, avoid new accounts when starting. Yes, you might make slightly less profit, but you'll stay in the game. And staying in the game is how money is made. Mistake number 4, releasing crypto too early. This one is critical. Some beginners release crypto because the buyer says I've paid. They feel pressured. They don't want bad reviews. This is how people lose money. Let me say this clearly. You do not release crypto until payment is confirmed in your bank or wallet. Not screenshots. Not promises. Not check again. Real confirmation. Scammers rely on fake receipts, edited screenshots, pressure tactics. They rush you so you don't think. How to avoid this? Take your time. Verify payment yourself. Ignore pressure. A real buyer will wait. A scammer will rush you. That difference saves your funds. Mistake number 5, poor payment method choices. Not all payment methods are equal. Some are high risk, especially for beginners. Chargeback-friendly methods, reversible payments, or third-party wallets can create problems. Many people fail because they use unfamiliar payment methods. They accept payments they don't understand. If you don't understand the payment method, don't use it. To stay safe, use local bank transfers you know well. Avoid complicated or international methods early on. Stick to methods with clear confirmations. P2P success is about reducing variables, not adding them. Mistake number 6, trading too many coins. Beginners love variety. They want to trade BTC, USDT, BNB, ETH, random altcoins. That's a mistake. Each coin has different liquidity, different demand, different spreads. When you trade too many coins, you never master any. Master one coin before chasing many. Most successful P2P traders start with USDT. Learn its behavior. Understand peak hours. No price movements. Once you master one coin, expanding becomes easy. Mistake number 7, emotional pricing. This one is subtle but deadly. People panic when trades are slow, or someone undercuts their price. So they drop prices too low, accept bad deals, or rush trades. That destroys profit margins. P2P is not a race. Your job is not to be the cheapest. Your job is to be reliable. Experienced traders price slightly competitively, but never emotionally. If a trade doesn't make sense, they wait. Waiting is a skill. Mistake number 8, no profit tracking. Many people think they're making money until they actually calculate. They forget fees, time, small losses, and suddenly profits disappear. If you don't track profits, you're guessing. To avoid this, track by price, track sell price, track net profit. Even simple notes are enough. Clarity beats assumptions. Mistake number 9, overtrading. More trades doesn't mean more money. Sometimes it means more mistakes. Overtrading leads to fatigue, sloppy checks, poor decisions. The best P2P traders trade less, not more. Set daily limits. Take breaks. Protect your focus. Mistake number 10, quitting too early. This is the silent killer. People try P2P for 1 week, 2 bad trades, 1 mistake, then quit. But every skill has a learning curve. Most people quit right before things click. The early phase feels slow, confusing, unrewarding. That's normal. Those who push through win. How to avoid failing at P2P trading. Let's summarize how to win. Treat P2P like a system, not a gamble. Start small and scale slowly. Prioritize safety over profit. Use clear rules. Be patient. If you do this, P2P becomes boring. And boring is profitable. P2P trading doesn't fail people. People fail P2P by rushing, ignoring rules, letting emotions lead. If you approach it calmly, patiently, and strategically, it works. If this video helped you, like it, share it with someone starting crypto, and check the related videos on my channel for step-by-step P2P tutorials. Let me know in the comments, what part of P2P do you struggle with the most? I read and reply.